Welcome to the Nichols Tax Update podcast. This program is produced to provide current information about developments in United States tax law. And the disclaimer goes on. The last paragraph is important when I acknowledge the value of my subscription to Tax Notes today. I could not prepare this program every week without the information I get every day from tax analysts in Tax Notes today. In my opinion, the preeminent source of information for tax professionals. What's in this week's edition? 6 items. The IRS is expressing its increased interest in cryptocurrency transactions, and we all need to be aware of that. We have one unreported item, extended the statute on the entire return. Extended the statute for assessment, but not for refunds. Very interesting. Then we have more information on large partnership compliance program. Additions to tax for 3 reasons in one tax court decision. My response to that is ouch. Then I learned something I didn't know. 50 years doing this, I didn't know about an offset bypass refund, and I thought you might not either, so we'll talk about it a little bit. And finally, the IRS is forced to the dictionary for a definition of broker when ruling on Section 1202 small business stock gain exclusion. And I know we had a lot of questions about what is a broker with regard to the qualified business income deduction. They handled that in the regulations, but there's nothing in the regs under Section 1202. So here we go. IRS cracking down on crypto noncompliance. At the UCLA Extension Tax Controversy Institute on October 2nd, these comments by IRS Criminal Investigation Division executives caught my attention. The agency has become adept at tracing and attributing cryptocurrencies in particular by applying data analytics tools to information gathered from cyber crime investigations. They're using computer-generated intelligence to identify misfeasors, those who are not properly reporting their crypto transactions. When they find them, taxpayer intent is an important factor in how far they go with the investigation. As of August 31st, for fiscal 2021, the IRS had seized $3.5 billion from cryptocurrency-related investigations. That was 90% of their total seizures for the year. So we got a series of John Doe summons which are generated following the following the summons that was served on Coinbase, which Coinbase responded to, not adequately, however. So that one summons for information from Coinbase about their customers yielded information on 14,000 users, and those were just the ones with transactions over $20,000. John Doe summons already issued this year to customers of Kraken and Circle, 2 other exchanges, could result in about 50,000 soft letters. Well, I read those words and I thought, well, what is an IRS soft letter? That's a letter 6713 or a 6174. And by the way, there's a 6714 in that series as well. Those letters have been used to educate, inform, encourage voluntary compliance, but now they're becoming much more intrusive, much more demanding. I want to refer you to Information Release 2019-132 back in July of 2019, and the attachments, all of these letters, all of these soft letters are attached to that information release at www.irs.gov. We can all go there, we can all read this, we can all, I think, encourage our clients not to play cute with the IRS about their Bitcoin or their Ethereum or whatever other cryptocurrency they've decided to hold or speculate in. Unreported subpart income extends the statute on the entire return. Here's an ominous looking fellow. Taxpayer omitted subpart F income. It could have been some other item of income for all we know and for all we care. All we're just looking at here is the same rules apply to reporting income that apply to claiming a refund, and they don't in this case. Two different code sections with regard to assessment and refund lack the same extension provisions. My point here is it pays to be a careful reader. Take a look at section 6501, limitations on assessment and collection, and then right after that, read section 6511, limitations on credit or refund. The rules are different. And if you are engaged in a tax controversy or you're representing your client, you need to know that the rules that allow the IRS to assess additional tax give them more time than it gives your client time to request a refund. You don't want to get caught in that slippage, because it'll certainly be embarrassing if nothing else. Large partners compliance. No. It's not large partners. It's large partnership. Similar to a program focusing on corporate taxpayers, but the classification point system's different. Point system? Yeah, this is how the IRS figures out who they're going to audit. Once again, they're using data analytics. They identify partnerships that have 100 million or more in assets, 100 or more direct and indirect partners, partnerships that have multiple tiers, and they're engaged in the business of finance or insurance. Those are the partnerships, the large partnerships that they want to audit. Doesn't matter if you have a large partner. Additions to tax for late filing and failure to make estimated payments. James Morris. They're liable for additions to tax under 6651. They failed to timely file a return. They also failed to pay the amount shown on the return. Now that's two different penalties, but if you're subject to one, you're not subject to the other. So that's one penalty. We usually refer to that as the 25% penalty, but it could be based on, if you have a very small tax liability, it could be as much as 100% of the unpaid tax because of the minimum penalty. But you're also liable for an addition to tax under 6654 for failure to make the estimated tax payments. Now, Mr. Morris failed to establish reasonable cause for the untimely filing and payment. He said he relied on the advice of his accountant not to file. There's no way that will ever be a reasonable defense. That accountant who advised him not to file a return is simply not competent. Let's move on. Here it is, the offset bypass refund. Who knew? There's a form 911. I printed it off. Here it is. It is a request for taxpayer advocate service assistance. I knew about that form. I knew I could request taxpayer advocate assistance if I wasn't getting anywhere trying to resolve an issue with the regular channels with the IRS. But as I dug into the information here, I learned that there is a hardship relief provision. It's in the Internal Revenue Manual. There's the citation. Offset bypass refund is it that citation, 21.4.6.5.11.1, refers you to Code Section 6343. Taxpayer is owed a refund, but is unable to pay basic living expenses. The OBR, and of course with the IRS, everything goes by its initials, offset bypass refund. When you read the descriptions here, the hardship manual refunds instructions, it's all with initials, right? OBR, TAS, etc. But OBR requests should generally not be referred to the Taxpayer Advocate Service. Well, wait a second. This is instructions for IRS employees in the Internal Revenue Manual. So the instructions are confusing when you read them as a taxpayer representative. As a taxpayer representative, your mission is to get this form in the hands of the Taxpayer Advocate Service as quickly as possible before the IRS assesses the tax. You want to get ahead of the assessment. So the reason I thought this was important is we certainly have been through a bumpy period where some taxpayers have had an extraordinarily hard time, and they've got a refund coming, they got a refundable credits, et cetera, but they owe tax for a prior year, and the IRS is going to take the credit. You can stop that with an offset bypass refund, but you're going to need to educate yourself about what the instructions are. So get a Form 911 and then go to these sections of the Internal Revenue Manual, read section 6343, prepare yourself to represent your client, and you can get a refund even though the client owes the IRS money from a prior period, and that's important. I think it's an important client service. Initiators that's going to be an IRS employee who initiates this after you give them the information. They have to initiate the offset bypass refund, the OBR. They're going to input, here you go with the acronyms, they're going to input the action code to identify that it was bypassed. They could pull the trigger on this fairly easily. Now remember, the IRS has no discretion to determine whether an offset to past due child support or other federal agency non-tax debt should occur. If that exists, the IRS has no authority to stop that with an OBR. So the taxpayer should initiate the request at the time of filing the return. File the Form 911 with the return to assure that the request is considered before the assessment date. If you file the Form 911 with the return, then your request for offset bypass refund relief will be considered before the tax is assessed. Finally, this week we have an IRS attorney who needed a dictionary to do his job. A recent letter ruling interpreted the term brokerage services for the Section 1202 exclusion of gain on the sale of small business stock. Is an insurance agent who sometimes refer to themselves as insurance agents and brokers, is this person a broker when gain on the sale of small business stock would be excluded or would be taxable? If the insurance agency brokerage is a broker, then the gain is not excluded. Legislative history was no help, so the IRS employee goes to the dictionary for a definition of broker. The definition in the Section 199A regs is limited to transactions involving stock and securities, so we knew that. To have the ruling in context, the taxpayer here is seeking to exclude the gain on stock in a company that works with its customers to obtain insurance, including property, casualty, surety, workers' comp, a standard insurance agency, and the ruling is that is not a broker. So the gain on the sale of stock in a C corporation, which qualified for Section 1202, will not be taxable if you meet the Section 1202 requirements. And here's the definition. 80% of its business was putting customers together, but in order to do that, they had to keep a lot of records, they kept files, etc. It wasn't just pure facilitating a transaction. They did not act as an intermediary, and they did not deal in stock and securities. So that's it. That's an exciting time this week. I thought it was some interesting things, different. It's not just the regular run-of-mill things that we get. It's always nice to learn new stuff, at least I think so. So until next time, thank you for joining me. Thank you for supporting the Nichols Tax Podcast. We'll see you next week.